Hello guys, welcome back. I'm going to go over market structure today because I believe I do it in a slightly different way to many other people, and I think it'd be something that's worth sharing to people who are struggling to look at it and completely dimming it down and really increase the rate of being on the right side of probability and the right side of the market. So to start with, we'll go over about swing structure and then into internal structure, how to market out. And then I'll give an example from a trade that I took on Tuesday, which was a trade on US 500, a short in London session. So to start with, price in the market creates lower highs, higher lows, lower highs, higher lows if we are in a descending trend. If we're moving up in an ascending trend, we're going to create higher highs and higher lows. So to start with, we see this black line, which is the swing structure. However, internally is the red. So the internal structure is something I don't think many people pick up on. So to say this was the 15-minute chart, the red, and then the black being the H4, looking at the higher time frame things, we understand price has got to deliver to certain points each time. I see a lot of people doing this with supply and demand, which is fine, and you can use this with supply and demand to add extra confluence. However, understanding where the lows are, where breaks of structure are, and where they are protected will allow you to be in the right side of the market and be in the premium or the discount area of it. So internally, we are going to see price delivering down to create a new low. Then it's going to continue down, or it may just pull back straight away when it's created a break of structure. The internal price, all this is to us is noise. However, it can be utilized when looking for entries for when price is going to pull back and follow a trend. So from the higher time frames, we look at the H4, the H1, and the M15 for this. So we look at what price is going to do on the H4, which could be downwards. We look at the M15, downwards. So when price gets to these newly created points and creates a change of character or a break of structure on the internal, this is when we see price is aligned with the higher time frame, higher low, and then creates a new higher high to create a new higher low. This here is now going to be a smaller point to break structure. So we want to see things called structural alignment. This will build our bias to know which way we are looking for. So when you see the change of character here, you are looking for an optimal pullback to align with the newly created higher low as it's defined when the change of character is created, which is the internal break of structure. A lot of people use supply and demand, and this can be definitely used as supply and demand as you can pull back. This could be the whole demand supply range. You can pull back in and you can see the same pattern move out on the lower time frames, such as the M5 and M1, which we will go into in another video. However, we're sticking to the higher time frame bias at the moment, as it does take a lot of time to build up and understand your intraday bias, or you can even use this on the higher time frames, and this could be the daily and the monthly. So now we've explained this, we can go over to the right hand side and look at the same process. So a higher high, a higher low, higher high, higher low. When these are created, we then presume, or we have a high probability of these lows to be protected. So when I see this, I mark it out as a protected low, and on here we created a protected high. We then see a break of structure, which is an understanding that this higher high is broken and we are now in an ascending trend. We never really want to take trades after this is taken, as it's not an optimal area, because we are in now a premium point which the big financial institutions are looking to short when everyone's trying to buy the breakout. They see retail money is trying to play the breakout, and all they want to do is push back into a discount area of this leg to then continue up if we are bullish. And the same if we are bearish, we'll create a breaker structure to the downside where everyone's trying to play the breakouts, and all they want to do is bring it back up to draw more liquidity into the market to then continue trend later on. So now you understand in very short terms what swing structure is and internal structure is. We'll go into an example. So now we've explained the fundamental process of swing structure and internal structure. We'll go on to an example that I took on Tuesday morning, which was the 24th of January. So we'll start from the left, look at the internal break and look at the internal protected high, and then we'll see why we were looking to go down. So to start with, we saw a breaker structure to the upside, then we saw a breaker structure to the downside. This then, in theory, creates a protected high, which is this candle here. So price should not go above this. So when we're in the internal structure, this is over Asia session, we see price is trying to go up, to fill back up, to then move back down. However, we see this large algorithmic candle on the close of New York Stock Exchange. So we see ranging, and then we see around 5:30 London Standard Time that price is trying to push down, and it's taken liquidity here. So now we see liquidity has been taken, and we have this now break of structure internally to this swing structure. So price is bearish here, and now price is bearish on the internal. So now we've got both confluences of structure to create our bias. We then have our OTE model, and price runs to the low. Because we have swing structure to the downside and we have an internal bias to the downside, price should take out this low in theory. So this is why we will create targets with our structure instead of looking at things blindly. However, I did use this point here as my trade take profit. It was just there for 3R. So I understand price could go down there. However, due to my model, we have a liquidity point here, which has a high probability of continuing price to the upside. However, we do have in theory price going down, but to be sure and to get paid, I ended up targeting here, which was 3R. If you want to see more examples of this, please drop a comment. You can subscribe as well. However, there will be much more in-depth videos like this. The next one will be on liquidity, how liquidity can be mapped out with structure, and we'll give another example such as this.